Could you be bullish on Kodak? Well, it has an IV rank of 44 and an IV percentile of 77, and such a strange chart that it's definitely worth considering for your cherry bomb trade today. If you like having high probabilities, but you can handle a little, I guess, air quote, undefined risk, it is a short put, then this might be a cherry bomb trade for you. So if you'd like to do that, hop on in to your favorite trading platform. Hi everybody, Neil here with Option Theory. Welcome back for those of you that are my loyal subscribers. For those of you that are new and aren't yet subscribed, I get it, let's see what this is all about, right? What we do here is we build out a portfolio here in ThinkOrSwim, and we use cherry bomb trades that are delivered to our inbox from tastytrade. In the description down below, you'll find a link to go over and sign up with the tastytrade email list. So that's homework number one. If you want to join us, that'd be great. And anyway, with that welcome, I want to move right into building the trade. You can see here on screen, we have a chart here for Kodak, and boy, is that not the poster child for flat? And then say, what? Look at that, right? That was a meteoric rise and then a return back to Earth. So it still hasn't come down to where it was. So some of you might still see this as a bearish sort of, hey, look, we're not there yet. But with this one, I'm interested in risking a little over $400. Yeah, that's what we're looking at, a $400 risk if Kodak should go bankrupt, right? And we could still lose some if it goes back to where it was, right? If it just decides, hey, you know what, nothing's new going to happen, we're going to go back to this $2, $3 range, then you could still lose. But of course, we're going to analyze this trade. But to do that, first we need to build it. So head on over here to this Analyze tab, go to Add Simulated Trade. We're going to be in the September 18th weeklies with 35 days to expiration. We're looking over here on the puts at the $5 put. So our risk is going to be the strike price minus the credit that we're going to receive. But I get ahead of myself. You're going to left click this bid here on the $5 put. You can see here that's where we are. I've got one contract in. You can use as many contracts as you want to get the exposure you're looking for. And then I dialed this up to a mid price of 60. There, the trade is built. Congratulations. Now let's analyze it and take a look at our probabilities. Yes, you get probabilities in the emails as well. You even get a P50 on this one, which the P50, if you look at Tastyworks now compared to the email, it's a little lower than what you got in the email. It's still about 80% though. So there is a good chance, an 80%-ish chance of collecting $30 on this trade. Sure, $440 worth of risk to make $30, but you're getting an 80% chance of making that, right? Anyway, here's your market, your expected move. Make sure your date is set to expiration here. And then I have my slices set over to the break even. You do that with this menu option here, set slices to break even, choose your turquoise line. And you can see here that it's giving us a probability of profit of 64%. Now, I'm not quite sure why this is so different compared to the email. It gives us a probability of profit of 73%. Either way, this number is still pretty good in my opinion, and I like the P50 that's in the Tastyworks platform of 79%. Those are still interesting to me. I'm willing to risk this, and then, hey, if it does go back to $2 and I can keep selling covered calls on that thing, let's see what happens. That's why we do this. We test out our theories on this one. So I'm going to right-click this trade, head over to Confirm and Send to review our max profit of $60. Should it stay where it is, go up or go down a little. With the fact that the IV percentile is 77, it tells me that there's a good chance we're going to see a contraction of that IV. So even if it does go down with the contraction in IV, we could still be profitable. But $440 of max risk, right? So I think if you did the math on this one, you'd get about 16% return on capital if you made a full $60 profit. That's still pretty darn good. All right, I'm gonna hit send. That's gonna put that over in my working orders. And I wanna know, if I lose 3 times my credit received on this one. You could set an alert on this one if you'd like. So what would that be? I'm going to do $1.20 more than this. So let's do, right click this, choose. You know what? Let's set it. We did this yesterday. We did an alert for what happens if it goes too low. I'm not too worried about it going too low on this one. But let's set an alert for profits, right? Create an alert. And let's say that the last price for this one is at 30. And it's going to be 50% profit. Take this trade off. All right, I'm going to hit create. And there it is. I've got my alert. You could do the same thing for this becomes worth $1.80, right? Then you can say, hey, 2 times the credit, 2x loss, consider closing soon. That could be another way to help protect yourself. All right, everybody, if you've made it this far, you rock. I appreciate you helping out my watch time. And if you wouldn't mind also, could you consider hitting that like button if I've earned it, and ring that bell and subscribe, then ring the bell if this is something you want to do along with us. Build out a nice simulated trading portfolio, practice your skills. There's no profits, but there's also no risk. There's all the learning. So I thank you so much for joining me this week and in this video. I'll see you Monday with a portfolio recap. And as always, I'd love to hear from you guys in the comments if you have any questions, if this is a trade you're gonna do. If I didn't talk about any alternatives, oops, my bad on that one. You could turn this into a vertical, no problem, right? And you would have similar probabilities with half the risk. All right, so yeah, like I said, love to hear from you, and I'll see you soon. Happy trading.